Hi everyone, my name is King IV and this is an ACC 626 workshop on accounts receivable. I would have provided you the accounts receivable data, and as well you would have had the trial balance data so that we can reconcile later on. And then a little bit case facts. The revenue is recognized upon the completion of the engagement. A little bit more details on what we need to do. We need to tie the accounts receivable subledger to the trial balance, reperform the aging calculation, and note any variances, identify any transactions that occurred in the fiscal year but were not completed till after the fiscal year end, and randomly select two of those samples for testing. So let's get started. So I would have already created my project. So here I'm just going to Desktop Plus. The files are Excel. We're going to go next. And we're going to add each of these three files. And I'm going to then add them, import them all. So now we have these three files. So like any good analytics practitioner, you should always do field statistics just so that we can double check. So let's take a look at the source files. Oh, looks like I already have it open. Okay. Let's look at the first one, which is going to be outstanding AR. And you'll see here 16 million. If we take a look here, 16,339,188. Perfect. And then you'll see here, engagement information is exactly the same. Good. And then our calculations here say 16,588. So you can see right away there's going to be some issues with this aging calculation. But nonetheless, that's what our role is to do this calculation. So first thing we need to do is determine whether or not we have a complete set of AR data based off the trial balance. So here we're going to summarize on customer type, subtotal amount, and we are going to call this type sum. Perfect. So we're going to see our amounts here. And now what we're going to do is I'm going to quickly open up the trial balance. So we see here the balance is here. So we can just copy and paste this, line this up. And we could probably just do some quick math. I could have imported this trial balance as well and done it, but this is just some quick total tying. So it does total out. So that's good. Perfect. Now, the next thing we want to do, so we've done the first part. Next thing we're going to do is reperform the aging calculation. So the way we're going to perform the aging calculation, there's a number of ways you can do this, but my preferred method is to use this aging function. And then here we're going to select, since we're doing a December 31st engagement, here we're going to select December 31st as our aging date. And then our buckets are going to be 0 to 30. 0 to 30, 31 to 45. Okay, so 0 to 30, say 45, and this is 60, 75, 90, and then let's select just some large amount like 10,000. And we're not going to create a result. We're going to create a new table, and we're going to call this AR aging. Perfect. And then we'll have it by days. So that would have effectively added, I actually didn't need all these other fields, but that's fine. What I effectively added was, what I really wanted was this, there's this aging one, which is great. And then we're also looking for the aging category, which is going to be this one right here, which tells us what buckets each of these amounts belong to. Fortunately, it sorts it like a character, which is fine. We'll just have to live with it. Okay, perfect. Next thing I'm going to do is I'm going to summarize based off of this age int. And I'm going to subtotal the amount. And then here I'm going to call it age sum. So now we have the amounts for 0 to 30, 31 to 45, 45 to 60, 60, 75, and then 90. So, but the tricky part is that this aging, let me just close a couple of these tables. This aging table is not aligned exactly the same. So either we have to change this one here or change it here. So I'm probably going to change it here just try it out. So we're going to call this day. And effectively what I'm going to do is all I really need is the last two digits except for the last one. So here I'm going to go character. And I'm going to say 10. And really what I need to do is I need to do an if statement. If date range does not equal greater than 90 days, what I'm essentially going to do is just going to take a left function on the date range, comma 2, comma, and then otherwise I'm going to make it 10,000, which is what our date range in the other one is. Okay, yeah, sorry, I did the wrong formula. It's not left, we actually want to do right, because we want to go from the right side. I'm sure everyone caught that mistake. That's the advantage of using virtual characters, is that you can change them afterwards, and we'll just take a look, make sure that everything lines up perfectly. That's great. And now what we're going to do is we're going to do a simple join between these data sets. I'm going to select the age sum here, and we're going to match it. Okay. Match it not based off of date range, but based off of day, or in this case, age inc. Perfect. And I'm going to include all records from both files just in case we mess something up. And then here I'm going to call this aging comparison. So now we can see some of the numbers. And effectively what we're going to do here next is we're going to calculate a variance. Pretty straightforward. We're basically going to take away balance minus account amount sum. And take a look here. So you'll see that they have aging calculation variances, which we would have predicted anyways because their totals didn't tie out. The only one that actually did correct was days 0 to 30. But that's effectively what you need to follow up on. You'll see here, looks like they've lower in their aging calculation. They have some areas where it's lower, some areas where it's higher. So you see here, they would have lowered for 76 to 90 days and 61 and 46 to 60 days, the actual amounts, while versus the 31 to 45 days, they actually moved some of the balances out from the actual calculation. So they reported lower in their aging formulas. And this is important because then you need to assess it, determine whether or not actually need to do some write-downs. But you'll see interesting here, the greater than 90 days, it's pretty high variance, but in general, they did their aging calculation incorrect. Okay, so the next thing we want to do, let's go back here. And the next thing we need to do is determine whether or not they recognize their revenue correctly. So here we're going to do it based off of invoice number. Again, if you had a company number, you probably should recognize on company and invoice number, but in this case we only have one. And then here I'll include all field types here, include all records in both just in case there's any records in one but not the other. And we're going to call this AR with engagement info. And to quickly check to see whether or not we're missing any invoices, doesn't look like it. Good. We can actually run some field statistics on this table just to make sure the amounts appear the same, which they are. Perfect. So what we ultimately want to find out is, are there any transactions that were invoiced in the current fiscal year and reported, but not completed until 2015? And you'll see that there's likely quite a few here. So they were a bit aggressive in their calculations. So not a problem. We're gonna extract that, and we're gonna call this early recognition. Let's call it early recon. And effectively what we're gonna say here is that the completion date is after, let's just change this to 2014 12/31. And even though I know all the invoice dates were correct here, I'm just going to do it just in case we're invoiced before then. Nope. So you can see here that they early recognized a lot of data, which is actually really not a good sign here, about $11 million. They'll definitely need to restate that or provide an explanation on why there should be an accounting change or accounting issue. What actually probably be helpful is to understand whether or not there was any certain customer types that were causing these differences. So let's take a look here. It's pretty even across. Definitely a lot of transactions in the small business, but that might just be because of small business has a smaller number of transactions. But definitely a big issue, something that they really should be looking into to understand. Possibly we need to investigate further whether or not there's any financial fraud involved in this. And you can see as early as last week they had just completed the engagement. So actually, before we complete, we actually need to sample two of them. So sampling is pretty simple. We're gonna click on here, sample 2 records, and we're gonna call this early rec sample. And we're gonna sample from the entire database. We're not gonna allow duplicates. And we'll take a look at these 2 transactions to see if they involve a certain amount of detail or if there's anything weird or odd that's happening. Thank you. I look forward to speaking to you next time. Thank you.